Washington Journal continues.
And this is Congressman Brad Sherman. As I mentioned before the break, he is a member of the Financial Services Committee in the House of Representatives. And while all the action has been in the Senate this week, it looks like you might have a vehicle for the debate to move forward as the Senate works through the process here. What's it been like watching both the hearings this week and also the filibuster and then ultimate move forward with the Senate?
Well, it's been an interesting show. The Senate always provides its share of entertainment, and I've been involved as a Democrat concerned to make sure that we don't see bailouts in the Senate bill, and secured a change that I expect to see in the manager's amendment that will prevent the bill from allowing the FDIC to make unlimited loans, or take unlimited loans from the Treasury and use those to bail out the creditors of financial institutions that have gone belly up. So I do think that, and I'm not sure this was intentional, but in the original Senate bill there was a bailout avenue for the executive branch to use, and I think that's going to be controlled. This
is the point of contention of the creation of a bank-sponsored fund that would be used for bailouts?
You know, they're two separate issues: bailouts and taxpayer paid for bailouts. And my focus is on don't have the taxpayers pay for the bailouts. And the $50 billion was going to be collected from Wall Street. Guess is that that'll be out of the bill, although we'll see. But my concern was that in addition to whatever they collect from Wall Street, and it'll be years before they collect any portion of that $50 billion or much of that $50 billion, that the FDIC could do bailouts with this unlimited credit line from the Treasury, and that's what we wanted to stop.
Did the Goldman hearings change the debate?
Maybe. I think it was just one more straw on the camel's back.
As time has progressed and you've worked on this issue, have you developed any more clarity around the right prescriptions needed, or do you feel, as you started at the outset, what you were working on is still the right path?
I think the House bill is a good bill, and what we need is controls of derivatives, higher capital requirements, consumer protection. And while we do need an orderly way to wind down defunct financial institutions, we ought to do that without the taxpayers bailing out the counterparties and the creditors. And we should take note that, as we saw in late 2008, the executive branch is all too anxious or all too willing to do bailouts of creditors and counterparties. You know, the vote was close on TARP in the House, went one way, then went the other way. But in the mind of the executive branch in 2008, it was a 435-0 vote. I mean, Paulson was 110% in favor of his proposal to have $700 billion worth of bailouts. So I think that we've got to tell Wall Street that taxpayer money is unavailable unless they can convince the House of Representatives and the Senate to provide money in the future, and I think that's pretty unlikely.
On the derivatives exchange, this week a letter was released by many dozens of organizations, non-bank organizations, agricultural companies, and the like, suggesting that derivatives legislation would impede their ability to hedge their own commodities. Would you talk about that and whether or not you think it would have economic impacts if in fact these companies couldn't trade derivatives on cattle futures or corn or whatever?
We're certainly going to have derivatives. They're going to be exchange traded or clearinghouse cleared derivatives. If that isn't exactly the way certain companies have done business in the past, it is a fine way for them to do business in the future, with transparency and, more importantly, with capital posted, so that when you buy a derivative, you know you're going to get paid by the person who sold you the derivative, and certainly not by the taxpayers of the United States.
Well, we only have another half hour with you, so I want to get to viewer calls here. Let's do that. Fort Worth, Texas. Joe, Republican line, you're on the air.
Good morning, and good morning, Representative Sherman.
Good to be with you.
I had a couple of quick questions. I was watching on C-SPAN a while back, and Representative Alan Grayson was questioning Ben Bernanke about some of the money that was being loaned out by the Fed, and Bernanke was not answering the questions as far as who is receiving this money. Why is it, or I guess it leads to my main question, which is, why is it that the end the Fed, or not the end the Fed, I beg your pardon, the audit the Fed bill has not been passed, and what is the status of that bill, since it is your committee that is responsible for reviewing it? Thank you.
Well, Alan Grayson and Ron Paul and I have all believed in auditing the Fed. That does not mean that we're going to take away the Fed's independence when it comes to setting monetary policy and short-term interest rates. The Fed, of course, would prefer to operate without oversight and without audit. I believe that we were successful in getting that provision into the House bill. I think it'll be very hard to convince senators to go along with it. In general, the Fed is a powerful institution with a lot of friends in the administration, maybe probably more friends in the Senate than in the House. And that doesn't mean I'm not a friend of the Fed. It's just I'm not a friend of secrecy at the Fed.
A House Financial Services Subcommittee is having a hearing today at 10 a.m., and I believe we have cameras there, which links to two of our topics, the one we're talking about here this morning in the United States, and also our earlier discussion on Greece. It is titled, Credit Default Swaps on Government Debt, the Potential Implications of the Greek Debt Crisis. Do you want to say a word or two on that?
Well, certainly the role that financial institutions played with Greece, lending them more money than they can afford to pay, and then engaging in some transactions. It's my understanding that Greece has already sold its airport tax for decades into the future, and that's a way of, in effect, borrowing money. But you say, well, we didn't borrow any money. It's just this revenue stream is now going to our creditors. Those kinds of transactions obscured just how much trouble Greece was getting itself into. And obviously, if somebody had turned the spigot off on Greece a few years ago, they'd be in less of a hole today, and the world economy would be in less of a hole. So I do think that currency traders and investment banks have played a role here, and what we want is a system in which not only do we want transparency in our banks, we want transparency in the national governments. And
how would the legislation that you're considering prevent this from happening in the United States?
I think we're still at the hearing stage. I don't think we're at the stage of crafting legislation. We're just studying the problem. This world financial circumstance is giving us problems more quickly than we can come up with solutions.
West Palm, Florida. This is Jeffrey, Independent Line. Good morning.
Good morning. I'm hoping the bailout, the $50 billion bailout fund does get removed. I don't think that's going to prevent risky behavior by these traders. The need to fail has to be a reality, in order to hedge that risky behavior. And if that money's available, I just don't see how, even though it's not taxpayer funds per se, taxpayers will end up paying for it by fees from the banks. So I'm hoping that does get removed. Also, the root cause of the financial problems, is that going to be addressed as well, the Fannie and Freddie, as well as the capital leveraging of the investment banks?
I think we're going to be dealing with the root causes, but I think it'll be that economists will be arguing a decade from now as to what all the causes were. We know some of them, and I think we're dealing with them. As to the possibility of bailouts, I will say this for all drafts of the Senate and the House bill, that this fund would be available only if the management is removed, the shareholders are wiped out. So it's not a bailout of the defunct financial institution. That being said, I agree with you. We don't want to see bailouts of the creditors and the counterparties. These are the folks who are stuffing money into the suit of the high wire gymnast, a circus performer, and doing so thinking that there's going to be a safety net. We don't want too much money invested in high wire acts. Out would be collected from Wall Street. I think there'd be tremendous political pressure not to spend that money because the Wall Street firms would have to ante up more if that money was lost. What my concern was, although I agree with you that we could probably do without this $50 billion fund, is that the funds available for the FDIC to bail out the creditors and counterparties of defunct financial institutions was not just the $50 billion, but $50 billion plus the possibility of huge loans from the Treasury. And I'm glad that first, by changing the House bill, and even more with the changes we'll see in the Senate bill that Senator Dodd and I have discussed, we're not going to have that borrowing, and the taxpayers are not going to be on the hook. So I think we're moving more and more toward a circumstance that if you lend money to a Wall Street financial institution, there's no safety net. So you may not want to, and even a $50 billion safety net is relatively small compared to what goes on Wall Street. As to Fannie and Freddie, we had bipartisanship in the House of Representatives in 2005. We passed the bill to provide for a much tougher oversight of Fannie and Freddie. I think it would have had a tremendous impact in ameliorating the size of this housing-led recession. And we passed it on a bipartisan basis. The bill then went to the Senate. It was opposed by the Bush administration. It was opposed by Senate Republicans, and it died. We passed a very similar bill in 2008, and it became law. And I think it was a good bill. I think it was about 3 years too late. So I think Fannie and Freddie need the kind of oversight that we provided when the law was passed in 2008, and they needed it a few years sooner.
Next question is from Clarkston, Michigan. Jamie, Democrats line.
Good morning, Representative Sherman.
Mm-hmm.
I watched the House and I watched the Senate, and I saw from 2006 till now, all the Republicans are just standing in the way of everything that's trying to be done. I'm not just a second-rate person out here. We're smarter than that. We see what they're doing. I don't approve of it. They need to get to work and help you guys. I appreciate your work, and Wall Street does need to be corrected, but all our economy is hooked together. Manufacturing, small businesses, bankers, even down to a baker, they're all hooked together. And we need to get these problems solved and out of our way. And this immigration deal with Arizona, that's a distraction. Take your time, make a good bill. I agree that we need to get a handle on the drug dealers, the smugglers, the kidnappers. We need to get a hold of them. But people that are here to work and make a living for their families, Arizona should be ashamed of themselves.
All right, Jamie, thanks for your call.
Thank you, and once again, I think we passed good legislation in 2005 to control Fannie and Freddie, and it's a shame it got tied up in the Senate until 2008. And I know the caller says that was Republicans, and in that case, she's right.
Next call is from Navarra, Florida. Phil, Republican line. Good morning, Phil.
Good morning. My question was about Freddie Mac and Fannie Mae, and so anyway, it sounds like there's some regulation now. Is that correct?
I didn't hear
regulation for Fannie and Freddie.
Yes, we passed the bill in 2008. It became law, and as I said, it was very similar to the bill that passed the House in the spring of 2005. It's a good bill. Obviously, by the time we got to late 2008, Fannie and Freddie were in such a terrible condition that no law could have put them back to where they were in 2005. If only we had passed the regulatory bill in 2005. We passed it in the House. It died in the Senate. Senate Republicans were unwilling to take it up.
Do you have more to say on Fannie and Freddie, Phil? Are you still
No, but as far as that Arizona law, all Americans that visit Mexico has to have passports, American passports to visit Mexico. They require that. Thank you.
All right, thanks. We're going to move on to our next call, which is from Carrier Mills, Illinois. And this is a viewer by the name of Melvin on our independent line.
Good morning.
Good morning.
Representative T.
Good to be with you,
Raymond.
Norm.
You're on,
How
Melvin.
you doing? How you doing today?
I'm doing fine.
Well, bless your heart. I was wondering what you think of the idea by having these big bank institutions some type of fee that the government can charge them, that they can build up over a period of time, that if they ever need a bailout again, that they can take that money that's built up and take it and help themselves out. I was wondering to get your feedback on this, and what do you think of the idea? If you can come up and look something like that up in your bill.
Well, Melvin, that you're discussing something that was really an issue within the Senate debate about the creation of a bank-sponsored fund. Do you have any more?
Yes, both in the Senate and the House bill. I mean, since the Depression, we've had one fund that fits the caller's image, and that is the FDIC Reserve Fund. But that is just there to deal with your insured bank deposits. Up to now, it's a limit of $250,000. Actually turns out, I mean, bank deposits up to $250,000 sounds like just about everything to deal with finance, but it's actually a very small part of the financial system. We now have non-banks, and we have deposits of well over $250,000 that are not part of that current insurance. There is a proposal in the Senate bill to do just what the caller suggests, and that is collect $50 billion from those institutions on Wall Street that have over $50 billion in assets. That's basically the 20, 25, 30 largest institutions. And I think that it's certainly a better idea to collect the money in advance from Wall Street than it is to be in a circumstance where taxpayer money is put at risk to bail out the counterparties and the creditors of these big financial institutions. So I think I mean, my own preference would be simply that other than the FDIC insured deposits, we don't have any kind of bailout. But if we're going to have any bailout, it should be limited to funds collected in advance from Wall Street. When I use the term bailout, it's not just a matter of bailing out the shareholders and the executives of one of these companies, but bailing out the creditors who gave them the stakes that allowed them to play the game.
Mr. Sherman has a law degree from Harvard Law School. He spent 15 years in the private sector before coming to Congress, and also 5 years at the California State Board of Equalization, including 4 as its chairman, and also has served as an instructor at Harvard Law School's International Tax Program. As we mentioned, he sits on the Financial Service Committee and its subcommittee on financial institutions and consumer credit and capital markets, insurance, and government-sponsored enterprises. Let's go to our next call for him as we discuss Washington's approach to regulating Wall Street in the wake of the financial crisis. Allentown, Pennsylvania. Victor, Democrats line.
Yes, my name is Victor Morales. You can call me Joe Carpenter. Just a question. All these people are losing their homes, foreclosures and whatnot. We bailed out the banks, right? Now, why couldn't the government, on behalf of people losing their homes, write a check out for the people, and then the people pay the banks, and then everybody's happy? But now you got the banks getting a bailout, and now the banks have houses. I mean, I don't see why that couldn't have been done.
Well, we are doing it to a limited degree. If we go to everyone who's underwater, whose mortgage is bigger than the value of their house, and write them a check for the difference, we're talking many trillions of dollars. Something like that would dwarf the size of the stimulus bill and the bailout bill combined. I don't think the federal government could afford it. We are providing banks with incentives on those that meet certain criteria to adjust the loans and allow people to stay in their homes, and I think that's an important thing to do, but it doesn't solve the whole problem, and I think that the focus has to be on those people who can afford to make meaningful the upward adjustment in their payments that is made under these adjustable rate loans with their teaser rates and complex provisions. And in those cases, we have provided incentives to banks. I can't say it's working as well as I would like, but we have helped tens of thousands of people.
Indianapolis is next. This is Jim, Independent Line. Good morning, Jim.
Good morning, and thank you for C-SPAN, and thank you, Mr. Sherman, for your political bravery during the TARP hearings. Love seeing you go to the floor and tell us about the behind-the-scenes fear-mongering that was going on from Paulson and the Fed and such to get the TARP passed.
That was a politically difficult time. I thank you for remembering it.
I commend you for that. And I was wondering, there's one thing that I haven't seen brought up in the regulation reform acts that are going on right now, and that's something to control the front-running going on with computers and the quant trading that's going on. And I was wondering if what you thought about a small, minuscule Tobin tax in order to try and stop that sort of thing.
The answer is I haven't studied it enough to have an opinion, and I do think that it doesn't do society a whole lot of good to have trillions of dollars invested and de-invested all in the same hour by people trying to game the markets. And if there was a small tax on that that discouraged or at least gave the U.S. Treasury some benefit, there'd be some social benefit from the activity, I think that might be a step in the right direction. But right now I'm speaking without the level of knowledge that I'd like. That isn't a proposal that's on the front burner now, and I thank you for bringing up another point that we ought to look at.
Stan is watching us in Marquette, Michigan. He's next on our Republican line. Hi, Stan, you there?
Yes, ma'am.
You have a question?
Yes. Good morning, Mr. Sherman.
Good to be with you.
I've been watching politics ever since the days of JFK.
Mm-hmm.
And back in 1913, they transferred our Federal Reserve in a closed session behind Congress to the banking system. My question is, how are you going to take and straighten out an entity that belongs to the banking system that pretty much does what they want to do? And it's shown that throughout time. So how are you going to correct a problem that's bigger than the power of the Senate and the House, and has been since 1913, of an entity that runs on its own?
The Fed is a very bizarre institution because it has a national board that is overwhelmingly controlled by appointees of the president, but then has these regional boards where it's not so much one person, one vote. It's like one bank, one vote, one corporation, one vote. The Supreme Court has said that the corporations have some rights when it comes to picking many of the seats of the regional boards of the Federal Reserve. Corporations are the only ones with rights. Democracy is supposed to work. We elect a president, and the president appoints executive benefit. There'd be some social benefit from the activity. I think that might be a step in the right direction. But right now I'm speaking without the level of knowledge that I'd like. That isn't a proposal that's on the front burner now, and I thank you for bringing up another point that we ought to look at.
Stan is watching us in Marquette, Michigan. He's next on our Republican line. Hi, Stan, you there?
Yes, ma'am.
You have a question?
Yes. Good morning, Mr. Sherman.
Good to be with you.
I've been watching politics ever since the days of JFK.
Mm-hmm.
And back in 1913, they transferred our Federal Reserve in a closed session behind Congress to the banking system. My question is, how are you going to take and straighten out an entity that belongs to the banking system that pretty much does what they want to do? And it's shown that throughout time. So how are you going to correct a problem that's bigger than the power of the Senate and the House, and has been since 1913, of an entity that runs on its own?
The Fed is a very bizarre institution because it has a national board that is overwhelmingly controlled by appointees of the president, but then has these regional boards where it's not so much one person, one vote. It's like one bank, one vote, one corporation, one vote. The Supreme Court has said that the corporations have some rights when it comes to picking many of the seats of the regional boards of the Federal Reserve. Corporations are the only ones with rights. Democracy is supposed to work. We elect a president, and the president appoints executive branch officers, often with the consent of the Senate. And the Fed is the only government or quasi-government entity where it's not we elect the president and he elects the executive officers or selects the executive officers. You have banks voting on who serves on these regional boards and selects the president of these institutions, of the regional boards that then get a say in monetary policy. If you've watched me before the Financial Services Committee, you know I've often proposed that we have the president select all of the Federal Reserve Board members, both at the national level and at the regional board level, and I hope to move in that direction. I wouldn't say that the Fed is more powerful than Congress and therefore immune to it, but so far the Fed has maintained its bizarre structure, where banks get to control who fills most of the seats on these regional boards.
The president is expected to name 3 to the Fed board, including Janet Yellen, a former Fed member, as the vice chair. That announcement could come as early as today. Any comments on Janet Yellen's qualifications?
I haven't examined Janet Yellen's qualifications or prior service. I think that the regulators in Washington have been a little bit too close to, too trusting of Wall Street, and I kind of start looking at any person and saying, okay, is that true of this person? There's a pernicious tendency, and that is, in order to learn enough about the complexities, you enter the belly of the beast, and all too often you become part of the beast.
Next call for Congressman Brad Sherman of California and a member of the Financial Services Committee in the House, Naperville, Illinois. John, Democrats line.
Hi, Congressman Sherman. I'm John.
Good to be with you.
I wonder about the Glass-Steagall bill. Was it? Why was it repealed? And should parts of it be reenacted? And would that give a little more control both to Congress and to the banks?
Well, Glass-Steagall consists of mixing investment banking on the one hand and commercial banking on the other, having the same holding company own 2 subsidiaries that do that. The main reason it was repealed is by the time Congress looked at it, over the decades, lawyers had found so many exceptions and loopholes that we had already had the insurance guys, the commercial bankers, and the investment bankers in the same beds for a long, long time. To me, the concern is not does an institution mix those 2 areas, but rather just how big is the institution. Bear Stearns and Lehman Brothers, AIG, none of them really mixed commercial banking in any significant degree with their other activities. And in fact, the repeal of Glass-Steagall and the mixture of the 2 activities, I don't think was part of their problem. Their problem was twofold. They were too big, and they were taking too many risks with insufficient capital. I realize there are certain transactions that are quite large, but banks have a habit of forming syndicates so that 2 or 3 or 4 banks get involved in a project. They already know how to do that. We don't need institutions of over 100 or over $200 billion in size in order to in order to finance business transactions.
Chicago's next. David, independent line for Congressman Brad Sherman.
Good morning.
Good morning.
Well, I heard the congressman say that economists do not understand what caused this crisis of the recession. Actually, there are a number of economists who did call this before, and some, in one case, like 12 years before it happened. And there are, these are not mainstream economists, though, and they're not dealing with imaginary models and, theories. They're looking at the real world. One of these guys was named Fred Harrison in the UK. Another one is Mason Gaffney in the US. And he put out a book called After the Crash about how to design a depression-free economy. And these guys are looking at the real estate market, which is the prime driver of the economy. Nobody talks about it as a cause of things, but it's a prime driver of the economy. And when the banks are, they're getting into the fervor, the irrational exuberance, they got easy credit, they're lending everywhere. That's a secondary cause of the bubble, but the primary cause, they're responding to a demand. The demand is in land. Land values keep going up, and that has to do with speculation on land. Land is a very unique thing. It's fixed in supply. It's privately owned, and demand keeps going up because population goes up. And so, therefore, the prices tend to go up until they can't go up any further, and then they kind of crash.
Okay, thank you. Let's get a response from Mr. Sherman.
Well, I didn't say that economists hadn't identified many of the causes of this problem. I think, though, we'll still be discovering new causes and debating which were the most important of the old causes. There's always a book for sale saying we're about to have a crash, and I think economists have predicted 20 out of the last 5 recessions. Which is to say there's always some group of economists predicting them. The fact is, in retrospect, it's pretty obvious, and I didn't see this, and almost no one saw this beforehand, and that is, if you compare the price or the estimated value of all the housing in America to the income of the American families that are supposed to live in those houses, it stayed within a reasonable range, and then about the middle of the last decade shot up, and it was clear that the prices being paid for homes in 2007 was completely out of sync with what American families could afford to pay. And looking at that chart, it was pretty obvious that this had to crash. But it became more obvious in 2008 than it was in 2007.
We have just a couple minutes left with Mr. Sherman. Next is a call from a town with a great name, 84, Pennsylvania. This is Susan on the Republican line.
I really don't see any positive outcome. I really don't see any positive outcome from this Senate Finance Reform Bill. You have the cutouts that Dodd put in. The AIG is not affected. Fannie and Freddie, 2 of the biggest causes of the economic downturn, are not addressed in the bill. You have Warren Buffett call up and get on you guys about derivatives, and that's changed. I have no faith whatsoever. It's because of what you all did earlier in legislation and in forcing banks to loan to people who couldn't afford to pay it back, that to me, the Senate and the House are just as big a cause of the financial breakdown and the financial downturn as any other part of the economy.
Well, I don't think you can criticize the reform bills for not dealing with Fannie and Freddie, because we dealt with them in 2008, and I think there's more to do, but as I said, that bill was passed by the House in 2005, and Senate Republicans wouldn't allow it to come forward. As to not dealing with AIG, that's in receivership now. It's hard to see how much more control the federal government could have. Although, frankly, I think we should control their board of directors as well, since we basically are taking all the risk. I think democracy is a highly flawed type of government, except compared to every other alternative. And the caller wants Congress to do a better job, and I think all of us do.
What do you think of the timeline for this legislation now?
Well, in the Senate, anything can be ground to a halt by just 41 members, and it's hard to see whether things will go forward on an orderly basis or not. The country wants to see reforms in these areas. They want the consumer protection. They want derivatives controlled. They want higher capital requirements. And they don't want to see taxpayer money put at risk to bail out private interests, whether those be shareholders or creditors. And if those basic views of the American people can't be translated into legislation, then our democracy isn't working.
You're good to come here and take calls from our viewers a couple times a year. We appreciate you doing that this morning.
Look forward to doing it more than twice a year.
Thank you.
Thanks.
Congressman Brad Sherman of the Financial Services Committee.